Good evening, everybody. Market has closed today, 7th of October. Today was a very interesting day in the Bank Nifty. I'm not sure whether I have seen this kind of movement, not in terms of price movement, in terms of structure building in any other day. Today we had almost three entries, okay, uh, two on the buy side, one on the sell side. All the three came into 1 minute chart for our trades. I'll just show you that. It rarely happens that you can get three trades with a golden structure in the same day. Okay. So before that, please subscribe to this channel so that you don't miss out to the live market analysis which I send across, which will help you to understand how the structure is building. All right. And please share it with your friends. Whoever in the need, they can explore more. Please like the videos if you are satisfied with, and leave the comment so that if I have to improve, I can work on that. So let's move on to the chart. I'm calling this as a 99% time the first target is always hit. There is a reason behind that. It is not out of the blue that I am just putting a 100% figure there. 99% is because the structure is giving you that result. The 1% is the ability of you to behave as a businessman in the market. If you are able to, I mean to say, meet that criteria of a businessman, who in a transaction with his customer or with anybody else is managed to come out in a profit rather than a loss. It is immaterial the amount of the profit. What matters is how much I am able to save my principal amount, or I'm able to save my losses. That's a businessman, right? So if you have that kind of attitude towards the market and that kind of passion to work with the market rather than gambling it, that 1% will define whether it should be 100% or it will remain as a 99%. Okay. So let us see how the market has done today in the Bank Nifty. This is the 1 minute chart. See this drop in the morning, two big bearish candle. Then we had some range bonding here. This is a pullback. Okay. So market has given a low, given a high, given a lower low. Then we had a test of this high again. And then market has channelized himself towards downside. Now these low formations when market makes in the early mornings, they're very important to look for, because there are trades and there are many retail traders and there are many people like us who keep trading all these moves up and down, isn't it? But the very good moves will always come from the selling on the high and buying on the low. How do you know this will be the good selling area? This could be the buy sell area, because this is a rally the market has done from this price area. So there has to be something very important for those big financial people who wants to protect this price and wants to go away from here. That means they want to buy on anything comes here, because the rally is in such a form. Even the selling price, you see how much it is dropping off. So that's the reason the market is trying to hold off, isn't it? So I look for finding a trade of the structure generally at the highs and the lows. But however, the market will give you structures building up inside that. Okay, so today this is what happened. Market channelized himself from this peak and from this peak to this low, making lower lows. This is the first low, second low, third low, and the fourth low, right? So immediately what we mark is for a break of a structure happens, and then you start counting your lows here. This is your third low, this is your second, this is your first low. The third low has taken out the high of the second low. Okay. A low will be valid only when there is a closing of a candle below the low of a second low formation. So this candle has closed, right? So there is a break in the lower low. So whenever this move happens, this becomes the third low, right? This is the first low. This is the lowest low after before this pullback, and then there is a break in a lower low. Okay. So this is the first, this is second, this is third. There is a break in a structure. Market comes back here. Our entry is defined at this location. And this is the area, not a single price. So market can, penetrate little further, can go to even lower of third low. That is all okay with me. And your stop loss goes below this. Now you cannot see me marking this low looking at this candle. All right, I will tell you why. And we just do not define the stop loss as a number. I need to understand the market comes here, how he's trying to behave. Is it looking at to go back or he's want to continue down? All right. So that is a different strategy. So this is how you define it. So the market has to come here, test this level at least 3 times, minimum 2 times, third times you look for the entry. So this is your first attempt, market pullback. This is the second attempt. Now he's coming in a step form, low, 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 pulls back. This is the third attempt. On third attempt, I'm looking for a pin bar. Mostly, at least 80 to 90% of the time, I'm looking for a pin bar. And then close above that. Close above the pin bar. Okay. Once this criteria is met, your buy entry starts from here. Your target goes to this. Once there is a break in a structure, after that, and between the entry, whichever is the highest peak, swing low, that becomes your first target. Now, this is the minimum you're going to achieve in the market. Once this pattern appears and the entry has been confirmed, this is the minimum you're going to get in the markets. That's the reason it's a 99% of the time market goes there. All right. After that, you have your rest of the swing highs. This is the one. And this is the fall of this channel move. Okay. Once this structure comes into play and your entry, market would like to take out all the liquidity on the tops, which it has created while coming down. All right. This is what usually market looks for to make a heavy moves. So this will be consumed, not here, maybe later on. Okay. But usually what I want him to do is consume it after a few tests of the first, then go back to the second, then go back to third. Right. 70% of the time market does this. Rest of the 30% of time, this is what he has done. Right. After the first target, it has come down, went back up, and it has creeped down. Right. If you're holding your position without booking a profit here, you're stopped out. All right. So what I suggest is you book your 80% of a profit around first target, rest 20, you just trail it. Okay. And then you exit between 50% of this move if it come down. All right. But usually I make a note that I understand the market, what he's behaving at. Even though it has gone to the first target, look at the structure, how he has gone. Okay. See, the market has given a burst of movement here. One, pulled back second attempt, pull back third attempt. Now he's giving a 3 pushes up in this high, right? Looking at the market is exhausting, may not reach to the second and third. So what do I do? If I get an engulfing candle and low is broken, I'm out of the market. Even though if market reverses from this position, I have no regret. If market goes like this, I have no regret. Reason behind, I have booked my profit. I'm not in the loss. I'm not regret of seeing that I would have made double the profit. No, that is not my concern. Okay. In fact, I can still reduce my profit, but I want to be keeping my profit and the taxes intact. That is one thing. All right. So you have to start behaving and understanding the market, what he's doing at a particular price, if it is working in your favor. And also you have to start looking at the price action in against you if the market is working at the stop loss. For me, it's not a single price, but however, for convenience, I'm telling you the price, your stop loss will go below the low of the third peak formation down. Okay. So first target is achieved. I'm out of the market. Now this is what the market did. This is the first setup we had. Next setup, immediately he gave towards the downside. We had a peak formation here, 1. This is 2. Combine these two together is the 1, which is 3. So what is process says? So I have a 3 peaks formation. The third, this is not the fourth one because he has just pinned up and come down. I need a closing above that. So unless and until there is a close above, I do not consider that as a peak. So combining these two high, for me, it's a third peak. Now this will be the second peak. The market took out the low of the second. And remember, the second low shouldn't be going below the low of the third one. So it should not happen that market trades below this and then pulls back up and gives this formation, then you say this is second. No, this will not be the second. This together will be the second high. Okay, this structure I have explained in my previous videos. So this is the third, this is second, and this is the first one. So we have a break in a structure. And what do we do next? We look at market to come at the high of the second peak. And where our target will be? The lowest low between this line of the second peak and the after the break. All right. Now after the break of the structure, market comes here first time. He makes another peak, small inside, comes down again, goes there. This is the first attempt, pin bar engulfing sell off. Okay. Now he has not gone to the origin unless and until assume that if market has given a first test and it would have come to the this price level and would have taken out this low, probably on its way back up. I'm not taking the third attempt because for me the journey of all the three has been done. So it may test that price area and then fall down, but I'm not bothered about that. So what you have to understand is unless until the market is working its way around anything between the second and the first high, protecting this journey of second move up, right? I'm interested to take sell off. Okay, so if market has consumed this by dropping directly here and then going back, I'm not taking. All right. Now this depth has to be maintained by the market. You know why? Because this is the built-up area. See this? Lots of SLs are lying here. Lots of breakout traders have been putting their orders here. Similarly, this way. See, this is a breakout. People would have gone in the sell, stopped out. Look at here. People would have gone as a breakout buyers also. So the market is doing a volume build up this area, and this structure holds it. So second, this is the first attempt, comes down. This is the second attempt. I usually wait for the third. I have not traded this sell side, and because there is no third touch here. But once you get experienced, I will tell you, you will start trading even the first touch also. But that will take time. So you have to get used to understanding how the golden structure works. When the time will come when you become so actively and practically involved in the market, when you start using it, the third attempts, you will slowly and gradually start becoming little aggressive with different variants of the market, and you know how to place your trades, isn't it? Till then, stick to the third test. First, second, pin bar, engulfing, sell off. The first target is the lowest low between the break of the structure and that high, right? This is the one. The market has just accelerated towards it within 5 to 6 candles and then gone to the third, your second target, and then ultimately gone to this low. So these two are quite achievable. This is sell side. This was the second trade. Okay. Stop loss goes above your pin bar and just follow through. Now, ultimately, we had a buy side as well. In my in the live market, when it was running, the first target has been achieved. First trade was done. I have posted a video while this formation was happening. So at that time, I have just given a glance in the video saying that there is a buy structure built up. So you can look for a buy on the upside. Okay, this is what has happened. Okay, I think the market was at this place when I have posted a video of the success of the buy. The market has dropped. We had the first low, second low, third. This is the lowest low. Okay, there is this candle is closing below. Sorry, this candle is closing below the lows of all 3 wicks. So we mark them. So this is the first low, pullback, second low, pullback, third low. What do we see? Break in a structure here. Which candle does? This candle does. Okay, it took out the high, broke the structure. Now this level is going to hold. Where it is. So take from the, probably from the close side till the tail side. So usually it tries to touch on the closes of the lows here, or may also penetrate a little bit inside the tail. Okay. Now the market, after breaking the structure, this is the first test, engulfing. Second test, all the 3 candles got engulfed. Market moves up. This was the place of a rally. Still protected. It did not touch. This is the third attempt. I see a rejection candle. See this pin bar? I didn't see immediate closing. Usually I would like to have the next candle closing above that without taking out the low of the pin bar. It has not done that, but there is more candlestick pattern which I have defined here, which is already in the play. But however, you stick with the engulfing candle. So on this candle, this is the close above, though it has taken out the low. Since it has taken out the low of at least 1, 2, 3, 4, 5 candles altogether, close above, then there's a close above. You would have gone buy from here. This is your third trade from this place. The first target would have been after the break is this is the one, this is the high. Your rally was intact. This is your second, and then you could have just trailed towards the third, fourth, and fifth. If you are going strictly with the swing lows, I think you would have hit your stop loss here somewhere. Okay, maybe a closure below, comma back, third time attempt comes down, you just exit. So that is how you have to behave. Start looking at the market, what it is doing there at your SLs, and then define. So we had 3 trades on the same golden structure. Okay, so this was quite of a unique day for me. Though I have traded only 2, this I did not do that because I was in a process of trying to set up for the videos. By the time I do, all this fall has happened. And then later on, I realized there was a selling opportunity as well. Okay, so guys, start working on this golden structure. Go to my previous videos, look into different trades we have been coming through in my Bank Nifty and the stocks. There are videos, I don't recollect the names, but I have explained on a board also how the structure is developed. There will be a variations. Please understand how the market works. Okay. Just by looking at my videos tomorrow, don't get into the trades. You have to develop the skill to understand the why price action is moving that way. Because there is sometimes I always keep talking about the why the market is behaving this way. This is a box channel in which the market is trying to build the volume to make a move towards one side. There is, see, they're taking out the stop loss going inside. During this kind of manipulation, this structure is most of the time, printed on the market. That's the reason we are able to see 99% of the success. Okay. Now this is in the smaller time frame. You can see in the daily time frame. It is irrespective of any time zone. I mean to say time frame. So it's a factorial price. So start working on that. Okay. And then how the market tries to approach to your buy zone area matters a lot, isn't it? How it goes, whether it goes in a squeeze form, because that will define the acceleration in with which it will fall or it will go up. All right. So there are different ways the market approach your buy and sell area. See, this was my buy area, right? Here the market came into testing this area in a 3-step form. First drop, pullback, second lower low, pullback, third lower low. You understand this is a different form. And this is a different form. The way market has come here, he did not make a higher high. He has dropped here, tested once, still the peak is down. Second attempt, went back, third attempt. Looking at, so the behavior the market shows when it comes to entry price of your second low, that will also develop a different kind of understanding that how precisely will it move to your targets. So you start learning that as well. Okay. That I'm unable to explain here, but please work on that. All right, guys. If that's the reason I've told you the first target is always achievable. You did not miss here. It is market has just given a vertical move right away to the first target. He even didn't creep up with the different lows and highs. He just went up. This is actually 70% of the time it will take you very fast. All right. So we are done with the target. So start seeing this in a different stocks also. Okay. And please learn more on this. If you have any doubts, just leave me a comments so that I can clarify or send me an email. I will probably try to clarify all that in different videos. All the best, guys. Have a nice weekend. I will try to make some videos for Monday if we have some stock for buy or sell side. Okay, so keep following it. Good evening and have a nice evening. Thank you.